Hey guys, Jacqueline Kreiner here, PBJ Mortgage, making mortgage simple as what? A peanut butter and jelly sandwich. So I get asked a lot, Jacqueline, got some extra cash laying around and I'd like to go ahead and apply it to my mortgage. Should I? What is that gonna do for me? Etc. All right, great question. So first, it's really important to note that this is when you already have an existing mortgage, right? So not that you're applying for a mortgage, this is when you actually already have the loan in place. Should you apply extra money to it? I actually always think it's a good idea to apply extra money to your loan. You know, go ahead and maybe pay it down a little bit faster. But there's a couple of options for you on how you can do that depending on the amount of money you're going to put down. So, as it is very surprising in mortgage, the answer usually is, what? It depends. That's right. It depends. So, in this particular case, is no different. It depends. If you're only going to put a little bit of money, right, down towards your mortgage payment, that is going to go to either principal, so that's going to actually, cut down the loan amount of time you've got, or you could put it towards escrow and remind yourself escrow is where you house your property taxes, your homeowner's insurance, private mortgage insurance, things like that. Okay, if you do not have an escrow account, some people don't, fairly rare, but some people don't, then obviously you wouldn't pay to that, okay? If you pay to your escrow account, that could be because maybe you know your taxes are gonna be more, or your homeowner's insurance just went up, or maybe you are behind, so like there's some money owed on that. So you absolutely could pay to that. But in this particular case, we're gonna talk specifically about paying down the loan itself, so the balance of the loan. So if you have a small amount of money, right, just as like a couple $100s here and there, then you could absolutely apply that to the principal loan balance. So that means that you're going to take that loan and you're going to notate that it is going to go towards principal, and it's going to just be bringing down the loan amount. Now, it doesn't change your payment. All that does is shorten the amount of time you have to pay. How much time? It depends on how much you put down. Depends on your interest rate. Lots of factors here that you have to take into consideration, but that's the case. If we're talking about substantially more money, so let's say we're talking about 5, 10, 20, 50, 30 grand, 50 grand, 100 grand, something like this, that's a different situation. So when you're talking about putting down more money like that, you typically are going to have two different choices. But this is very, very important to note. You must check with your loan servicer. So if your loan servicer does not allow this next thing that I'm going to mention, it's very important that you notate it. Also, sometimes if you do what I'm about to suggest, it does cost money. So you want to reach out to your servicer to ask them two questions. Question 1, do you offer recast? That's what it's called. Question 2, if you offer it, how much does it cost? Okay, there's usually a fee associated with recast. Now, what the heck is recast, you say? Well, recast is when you pay an amount, a lump sum amount, usually at least 5 grand, but sometimes I think they may want more like 10 or 20 grand that you're going to put towards the loan amount. So you're lowering down the loan amount, and they take your balance and they stretch it back over the same amount of time you have left. Okay, not the full amount of time again. No. So like if you had a 30-year loan, so 360 months, and you have paid 20 months in, so now you're 340 months. If you do a recast, they're only stretching it back out over the 340 months you have left, okay? But that will bring down your payment. It's the same interest rate. It's not going to change that. All it's going to change is the amount of principal and interest you must pay for the remaining amount of time, okay? So if you apply it to principal, it doesn't cut down the payment. It just cuts down the amount of time if you have to pay. If you do a recast, it goes ahead and it stretches back out that new amount of money over the same length of time at the exact same interest rate, and now it's going to reduce down your payment. Why might you want to do that? Well, maybe you're trying to budget, right? Maybe you're about to go into retirement, or you know that you're about to take a job that's a lot less money and you have a bunch of money sitting in your account, so you're trying to budget properly. Those are some of the reasons that people might want to recast. Why does it typically cost a fee? Well, the mortgage company has to go ahead and do a bunch of paperwork. So they've got to redraw some documents and have you sign some things to be able to make that valid, right? Because remember, you signed a bunch of paperwork when you closed on your loan that said, the amount of time you got to pay, the amounts, and all these different things, the amortization schedule, all this stuff. they have to make sure that you are going to have that new paperwork that gives you all the new amounts. Okay, so should you do it? Maybe. It depends on what you need, right? Depends on what is important to you. There's potential tax reasons you should or shouldn't do that. Not a tax professional here, so you should talk to whoever your tax professional is and ask them their thoughts in respect to that, right? So there's lots of different factors there, but if you're going to pay additional money down, those are going to be your two choices. You can apply directly to principal, and you're going to go ahead and you're going to reduce down the amount of time you've got to pay on your loan, or you could do a recast if it's over a certain amount of money and your servicer allows it, and then that's going to stretch it out over the same amount of time and reduce down your payment. So those are kind of some of your options if you want to go ahead and put down some additional money on your loan after it already exists. Hope this is helpful.